Earth Day is Wednesday. We are checking in with money man Craig Bolanos. Craig is a co-founder of VestGen as well as a wealth advisor. Craig, let's get your common sense on investing in our Earth. What are your investing suggestions and what should investors be considering?
Well, you know what, Angela? I mean, at this time of the year, when everybody celebrates nature, think about protecting Mother Earth. For some investors, that's going to be profits with a purpose. And whether that leads someone to a discussion of SRI, socially responsible investing, where you're excluding certain companies based on maybe a thematic like their carbon footprint, or maybe it leads into the concept of ESG, environmental, social, and corporate governance, where you're screening companies using an ESG matrix, or maybe it leads someone who's already achieved wealth to what I call impact investing, where it's about doing good first and having a rate of return on that investment second.
Does ESG always work for everybody?
No, ESG absolutely does not work for everybody. You know, case in point, this year, we saw an oil shock leading to an inflation spike. And that's made energy companies one of the most profitable sectors for the year. And there's going to be a lot of ESG investments that have screened out those companies that have a large carbon footprint, aka the energy industry. So those are underperforming. But like all things, ESG comes in so many different forms. And I think that means clients who want to be ESG investors need to really look under the hood and make decisions of whether they're comfortable investing through energy transformation or in some other format.
Should people follow the money when considering investing in stocks connected to the Earth?
Yeah, I think you absolutely have to follow the money. I mean, the story is and will remain powering the world. The story is going to remain this insensible search of a need for energy because of how much a data center takes. I mean, to power data centers, to power artificial intelligence, these semiconductors consume a massive amount of electricity. And we've seen governments, states, municipalities, and businesses throw out the playbook, whether it's what I call fossil fuels, whether it's clean energy, whether it's this or that. People just want energy. And that's why I think if you invest in infrastructure today and you invest for transformation, just getting exposure into all those different thematics, which can be done with good private equity funds, or it can be done using dirt cheap, low cost, tax efficient ETFs. There's a way to get it done for absolutely everybody.
What are your Earth investing steps that investors need to know?
You know, Angela, it's funny. We're talking about Earth Day and someone says, wait, I can't possibly consider traditional oil companies like the Chevrons, the Exxons, the Marathons. And I would challenge people on that to say, look at how much of those enterprises are converting into this transformation for clean energy that's being driven not just by money, but being driven by policy across various countries around the globe. So before you discard those conglomerate energy companies, really take a look at the energy transition that they're working towards through policy and monetary decisions. ETFs, as a reminder for everybody, are a great way to get exposure to a diversified sector or subsector of the clean energy marketplace, because you can access a professionally managed portfolio of stocks in a low cost, tax efficient solution. And if you want to learn more about talking about SRI, ESG, impact investing, and investing for transformation, I encourage you to connect with us online at getretiredstayretired.com. That's getretiredstayretired.com.